Good afternoon and welcome to the FX Daily Wrap-Up with ForexAnalytix. And we're seeing a relatively quiet session here with the dollar and also the euro. What we are seeing a quick turnaround here is with the dollar CAD. On Friday, and let's go on and just take a quick peek at that. On Friday, once we got the news data released, we saw a big run up here to 131, only to turn around and quickly lose it and actually drop off 50 pips from the high. And then we actually ended up testing the old 3043 area here. Bias chart resistance, we're looking for still a move potentially to that 29.95, but 3043 has been that old area, and you can see here that they took a dip down here to 3040 and then turn around and after rallying and reversing those gains, now turn around and reversed the losses or the pullback, and we henceforth have gone and made this run just right back above 31 and a pretty solid close here on the 2-hour chart. So looking ahead, where can we go to? Well, what I'm looking at is an area that was a pretty good little level here and previously, and you can see it here, the 3142. So this is where I think they'll probably try and run to. Now, that being said, that's actually confluent 3142, and you can see the touches coming across here and failure basically 3 times, turned away. That also confluences with 3147, which is the 23% of the entire move back here, all the way up to this high here. You can see it at 35.66. So that's the 23% back. So some good confluence. And like I said, when you get a strong 2-hour close like this, that's, suggests we'll continue to see more follow through. Will we see a little bit of a pause here? Yeah, you can see a little bit of a pause, but certainly looks like, the market will want to go on and make a run for that 3142, and that's confluencing with 3147 to 23%. So if you're stepping in trying to short this, I was able to get off a successful scalp short this morning, coming up right up here at this 30.92. Now we had our bias chart resistance for the day at 30.88, but as the market was coming back, was coming strong, I took a quick look at it and pulled that 30.88 off the daily. But I looked on here and I shared this in the chat room, and you can see right there coming in at 30.91. We had actually made this run up here. I think we got up to like 31.94, something like that almost, and was able to grab off a quick scalp. But boy, this market turned around and came back quite quickly. So I'm glad I was able to get the heck out of Dodge. I figured, hey, big run up here. First challenge up here, should see a little bit of pare back. And I thought maybe I might have been, too quick to take some gains. But boy, it sure was not the case, because we turned around and really flipped strongly. Obviously, this was on the backdrop as crude oil was weakening. So we saw the rally, but we did go in and finish with the strong 2-hour close here. Basically right there at those edges here. So, and the market is adding on a little bit further. As I mentioned, I think that the market will try and make a stab towards this 3142, and you got a great confluence here with the Fibonacci, 3147, 23% of the entire move back. That's the only thing that's really moving. We did see the peso make a run up here to 1908 and pare back a bit, but there's not any real significance with the other markets. They're relatively quiet as we wait ECB and also the next week, the Fed. And I did mention saying that everything's relatively quiet ahead of that, and the markets are pricing in a 46% probability that European policymakers will lower the rate by 10 basis point to minus a half a basis point. It says, you see here from TD Securities is saying our base case for the ECB could see some small upside in the euro versus the dollar unless the governing council delivers a strongly dovish surprise. Well, don't rule that out. They may just do that. Just that. Rising chance of European interest rates sliding deeper into the negative territory. Speaking of deeper into the negative territory, let's go on and move into the show you what the boons are doing. And this is, we've talked about that before. This is one of the reasons why the euro was simply not able to hold any gains. And you can see the boons here new all-time highs. We had seen this run up here in the bunds previously, and this is what really knocked the euro lower. But we did see a decent little pullback. Well, heck, we have come back with a vengeance. And look at this, boy, we have come back. I mean, taking out these highs, but look, a pretty good, pullback from these lows here after, a decent pairing as the market paired back. And then we've just reasserted ourselves to new all-time highs, obviously, inversely new all-time low rates here. They're talking about different things they may go on to do with the ECB as far as the TLTRO. But getting back in regards to the dollar, and like I said, it's a fairly quiet session, so I think the market will stay that way until we get there. But they did say also that that bulls did go in and pare back their positions on the dollar via the CFTC data, and they're talking about the perceived chance of a half cut soaring to 71% after the dovish speech by New York Fed Williams, which he did try and back talk that, or the New York Fed tried to back talk that or backstep that. But moving on with the ECB, the thought is, hey, how dovish are they going to be? And we'll see what happens. Let's go on and shift back into the main screen. Even gold here, you can see, is relatively quiet here. We are seeing the cable start to slide back. We saw a little bit of short covering last week as we defended the 124 area here. Pull this back in here. But you're seeing, we saw a decent little amount of short covering, not anything great, but a decent amount, only to see us starting to slide back. And speaking of the pound, it says the currency, there are concerns about, the whole thing with Boris Johnson is going to be, by tomorrow, we should go and know that he is we call it the winner or whatever for the prime minister. That should be resolved and set up for Wednesday. It says, the result of the weeks-long internal party election will be announced on Tuesday, with Johnson widely expected to have beaten Foreign Minister Jeremy Hunter. Also, the pound traded down to 24.76, not far from the 27-month low reached last week, having declined 1.7%. Investors are worried Johnson could pull out of the European Union October 31st without a trade deal, and is in place to appease the members of the Conservative Party and frustrated pro-Brexit voters. So that's the concern, is that they're going to spiral out. It also indicated that one of the reasons that we're seeing this pair back is we're seeing a lot more option buying to factor in this risk of saying that have been buying options since early May to protect against losses in sterling have consolidated their positions in the past few days, according to 3-month sterling risk reversals. 3-month implied volatility in the pound has risen since the beginning of the month and has hit its highest level since early April. The thought being, there was one analyst that had even mentioned here that she believes that the euro pound can go to parity if we spin out October 31st with nothing. Says hedge funds have also increased their short positions on the pound to $5.94 billion in the week leading into July the 16th. The market will look to price in the chance of a no-deal Brexit to 50-50 chance. Morgan Stanley says it saw 30% of Britain leaving the EU after previously had it for 25%. The risk of a no-deal Brexit is really underpriced now, says one analyst, saying that she expected to see sterling fall to parity against the euro in the event of Britain crashing out of the block with a no deal. So, like I said, we certainly have the opportunity to go in and move lower here with the cable. Those are the more significant ones. As I mentioned, the dollar index, you can see, is trading relatively quiet. Same thing here as the euro as we await ECB. The more significant mover has been the dollar CAD, which had, after rallying on Friday and then reversing their gains by 50 basis points, has, and actually from top to bottom, actually saw a pullback of over 70 pips. But we turn around and now reverse that and have gone to new highs on this, and with the potential, I believe, to get to the 31.42 with the strong close we saw on the 2-hour chart. Look at that, back-to-back strong 2-hour candles here. But other than that, everything is relatively quiet. There's not a whole lot going on here. We can go on and take a look on the cross rates. The one market that continues to sag has been the euro kiwi. We know that the kiwi's been strong overall, but boy, this euro kiwi has just been, as I say, down like the submarine horn. You can see this. It has been absolutely relentless, this move lower here. I mean, boy, I feel sorry for anybody that's trying to catch this falling knife, but we're coming into a little bit of support here. Nothing else of any real significance. The guppy is trading in between here. There was some support found around the 34 area. We've made a run up here to 35, but really nothing of any consequence. Same thing here with the sterling versus the odd. And the Aussie yen, we've got 76.19 as our resistance. Same thing, as I mentioned, relatively quiet markets. The only one that's adding a little bit with a little bit of short covering is here on the Euro Aussie. But other than that, everything is relatively quiet. You can see here the Euro yen still sagging around its lows, not being able to get much of a headway, to be expected with the weakness that we're seeing here in the euro. Other than that, it's a quiet day. And as I said, the key, to me, a key component to keep this, keep a lid on this euro is this bund. And as long as the bunds are making new all-time highs, new low rates, inversely speaking, hard for the euro to get any kind of attraction. It's basically like running around with a ball and chain on it. So that's about all that we've got here, because like I said, it's a very quiet day. But thanks for joining here on the FX Daily Wrap-Up, and we'll see you tomorrow.